First off, I want to thank everyone who has taken time out of their busy schedules to wish me a happy birthday in the last couple days. It is very much appreciated. My birthday so far has been pretty good, pretty relaxing. I had a nice steak last night, so that was good. It was called a drunken ribeye, and no, I didn't have a bunch of beers. The steak was marinated in beer at a restaurant, and then it was grilled. It was grilled ribeye. So this show's just going to be a very short show, but it's an important topic. So the tweet that you guys see on your screen, it's a good summary of the oil market. So the oil bulls have had U.S. pipeline bottlenecks in the Permian that slowed production, a mandatory production cut in Canada, 3 years of cuts in OPEC, and OPEC probably cheated, a Venezuelan and increased production or didn't live up to the quotas because OPEC historically cheats. Many countries in OPEC historically cheat. A Venezuelan production collapse, Iran sanctions, and an attack on Saudi oil facilities. And yet here we are at oil prices. I don't know if those exact prices. Let me pull up the oilprice.com, which is one of the best free resources. We have WTI at $52.81 and Brent crude at $58.37. Guys and gals, I am looking at a chart of the 1 month chart of both oil prices, and before the Saudi oil attacks, the WTI oil price was at $54.85. The Brent crude price was at $60.22 a barrel. They have given all of their gains back from the Saudi news. And the Saudi Oilfield attacks, actually there's a lot of people that don't believe the Saudis. There's an interesting op-ed piece on the oilprice.com website. You can take a look at it. I'll put it in the information and description section. Again, I'm not going to read it today because I am going out in a little bit. I just wanted to update you guys before I go out later for my birthday. So I think the oil price is showing weakness a lot because, number one, there's still a large amount of inventory in the U.S., and in the short term, that matters. In also the dollar, even though the dollar is rallying, I don't think, and the dollar is still strong on a relative basis to other fiat currencies, I do not think that plays a very large part in the oil price. I think the oil price, my humble opinion, why the oil price is reacting is mainly due to weakness in the global economy. So the oil price is reflecting how the global economy is drastically slowing down. People are looking at the export data, the data out of China, the data like I discussed on the interview I released late last night, early this morning, that I spent over an hour editing with Adam Tumerkin, which was an excellent interview. The bad export data out of South Korea, Taiwan, Japan, Germany, and also China. So on top of that, the market right now is just focused solely on short-term things for oil. In the long term, there's a lot of problems. So even though oil production in a lot of shale producers hasn't collapsed yet, there's warning signs. So Steve St. Angelo just put out an interesting piece in the last couple days that more than 50% of the mighty Permian's 2018 oil production is vaporized. And he's talking about dark clouds gather on the financial horizon for the shale oil companies. So in the short term, if oil prices goes lower, some of these shale companies might not be able to cut production. They have debt. They have hedges. So they're not going to be able to cut. But a lot of them are not going to be able to raise capital. So the oil price to me is another leading economic indicator. Oil price and copper price, I would say, are good leading economic indicators. If both of those continue to be weak, then the likelihood of another financial crisis accelerating is only more and more imminent. So that would be my humble opinion. So continue to watch, not financial advice, just my opinion, continue to watch the copper price and the oil price. Because there is a lot of people actually in the oil market, in the oil industry, who don't believe the Saudis, who think that the Saudis are claiming, OPEC is claiming, not OPEC, Aramco, the Aramco executives are claiming that all the oil production is back online. My voice is a little sore, so I apologize. I'm doing the best I can. So the oil price is weakness, and this is not going to be good for the shale companies because they're not going to be able to raise money. This will be good for some larger oil companies that might have better balance sheets that are looking for acquisitions. But the problem with that is if they do shale oil acquisitions, a lot of these shale oil wells are not that economic. And a long-term problem, which the oil market right now does not care about, which is important for the real-world economy in general, is that there's been, over the last 3 or 4 years, very few oil discoveries. There was a piece out a couple days ago from Nick Cunningham of oilprice.com. I really like that guy and his writing. I've been following him for years. That oil discoveries in the last couple years have hit a 70-year low. So if there was not subsidized U.S. shale oil, if there was not shale that was subsidized, uneconomic, that was increasing production like crazy, the oil market would be in big, big trouble. Oh, I'm not optimistic, guys, right now. What do I think about exploratory oil companies? I'm not optimistic about any oil companies right now. I think there's going to be a big, big bust, in my opinion. And there will be a time and a place to be bullish oil, but now's not that time. That's my opinion. So I would, if you're looking to get long oil, I would be waiting with cash on the sidelines. If you're a short-term trader, a swing trader, or a day trader, or a hedge fund manager, you can set up hedge short positions with options, and you can hedge your short positions with calls. Again, not financial advice, just my opinion. You can hedge, because if there is another Saudi attack, let's say it's found out, it's proved, even though a lot of people actually think this, that the Saudis are actually lying, and it's proven that the oil production is not to those levels again, then you could see another pop in oil price. But the oil price does look down. It's not staying high on any news. It's being sold off. And as long as the inventory levels here in the U.S., there's not enormous months and months of continuous drawdowns in the inventory, I don't see that changing. Because the global macro data is not positive. So the market is worried about demand for oil. Long term though, guys, and this is not affecting the oil price, but long term there is a lot of oil supply problems. Okay, the shale oil production that's been increased massively, and that's supposed to increase a lot in the next 12, 24 months, still, a lot of it's uneconomic. No, I didn't go out drinking. I had one beer at dinner, and then my steak was a drunken ribeye. It was marinated in beer, and if you're familiar with that, then it cooks off on the grill. I may have a cold. I have to take some more vitamin C. So there's other articles to take a look at, but the oil price, the bottom line is that the oil price has now, in Brent crude and WTI, given back all of its gains after the Saudi oil attack at Abqaiq. And there's a lot of people in the oil industry that don't believe the Saudis or Aramco. They don't believe what Aramco and the Saudi oil ministers are saying about how the oil production is all back online and how everything's fixed. But the oil price, the majority of oil traders, they seem to not really care. They're shrugging it off. I think, like I said, it's all about global macro data. People are looking at the data and worried that the global economy is rapidly slowing down. Whether you believe me or not on China's credit bubble or how they're hyperinflating their currency and how corrupt, crooked politicians. Remember that guy in the last week or so? He was caught, the corrupt Chinese politician, with 13 tons of physical gold. And here's the other part. He had a secret vault, 13 tons of physical gold, over $500 million market value physical gold. The other part of the article that you don't see that the politician had, he had around $42 billion worth of printed RMB. Chinese yuan, printed RMB. So he had gold, an enormous amount of physical gold, and he had, I don't know how he had accumulated that much cash, but he had accumulated around 42 billion with a B dollars of Chinese RMB. Crazy freaking stuff. I don't know how he didn't get that stuff out of the country. He should have had a harem of beautiful Chinese women wearing gold jewelry, and he should have marched like 20 of them, like Leonardo DiCaprio in Catch Me If You Can, the stewardesses. He should have marched them with him on a private jet to Hong Kong wearing Chinese jewelry. And he should have, once the jewelry was in Hong Kong, he could have gotten it to another city. That's a Breaking Bad level of cash. Man, that's more money than corrupt U.S. politicians can steal. $42 billion worth of printed RMB the guy had. Not only did he have all the gold, he had all that cash too. The guy had to be a moron. How did he keep all that in one place? Oh, and unfortunately for that guy, he's going to be executed. So, yeah, no trial, no nothing. He's getting executed. How big is his vault to hold 42 billion? Well, he had multiple vaults. He had a couple hidden vaults because he had 13 tons of physical gold, and then he also had the equivalent in RMB of $42 billion worth of cash. He had multiple vaults under his mansion. Crazy stuff. Okay, so I will attach links to these articles that I'm talking about, especially from this guy, Tom Kirkman, who wrote an op-ed for oilprice.com about how he thinks the Saudis are lying. So if you want to take a look at that, want to take a look at Steve St. Angelo's articles, want to take a look at how there's not been oil discoveries now, the least amount of oil discoveries in 70 years in the last couple years. So very few oil discoveries. These oil companies are not spending money on exploration and development. The gold miners are in the same boat. The gold miners cut costs to the bone. The oil companies are too. So long term, there's problems. Obviously, in the oil prices is not being reflected. The markets right now are very short-term oriented. They do not care about the long term. And that's it for the short little update. So thank you again to everyone who's wished me a happy birthday. Thank you to my 150 Patreon account contributors. Thank you to my almost a dozen monthly PayPal contributors. And thank you to the people who tip me once in a while. It's much appreciated so I can continue to build this online, get to 30,000 YouTube channel subscribers if YouTube doesn't censor me permanently, because I think I added all of 100 subscribers in the last month. That was it, even though I was growing at 2,000 new subscribers per month, and I've been posting a new video every day for the last, at least one video, every day for the last 5 or 6 months, except I think I've taken 2 days off in the last 5 or 6 months. So that's it for right now. Hopefully my voice feels better for tomorrow's little live stream show, and I think this tweet, the reason this is a short show, not only am I going out for my birthday to go hang out with some friends, but also because going out to dinner and then out to hang out later, but also because I think that tweet that's there on your screen summarizes things very succinctly about the structural problems in oil and how even news that would be bullish for oil did not keep the oil price up for very long, because I think people are weighing the global macro data versus what the Saudis are claiming how the oil production is back online. Okay, everyone, bye for now. Everyone have a nice rest of your weekend.